Under Armour, UAA, on the New York Stock Exchange. I'm surprised I haven't done a video on this one yet. I just looked through my archives. I didn't have one. I was stunned. I had a good day today, up 4.8% for the day, and it's a big tech rally. So I wanted to get something in there that wasn't tech. Go look through our archives on tech. We got a ton of them. Just did one on Skyworks and all the semis. We like a lot of them. And what we were saying in our archives still stands true, but you're getting out cheaper prices. So I'd say let's go in on those. But let's take a look at another one as well. Under Armour, still a bit of a turnaround. The 3-year cumulative average return is minus 12%. So if you held this for 3 years, you'd be down 12%, then another 12, and then another 12. And we're looking for that turn. And I always say over and over again, do not try and speculate on that turn. Let the financials tell you, not the stock price, financials, and basically the return on invested capital. When that turns, or at least flattens out, or potentially a little bit earlier, if you have every reason to believe that that is the bottom. But trust me, if you think it's the bottom, you better have a really good reason, because I've done it many times, even myself, saying, oh, I like to wait for the turn, the actual turn, and then I try and get in a little early, and I can not tell you the amount of times I usually get that move wrong, mostly wrong. When I wait, I get it right, and I do well. All right, so we're here. Let's jump into the model, and here you see the return on invested capital coming down. The stock, like look at this, right at the end of this nice run of good returns and capital growth. Right when it starts to come down just a little bit, the returns, that is, the bars, in other words, that's when the stock starts coming down. Stock comes down all the way down, right to when the returns, right in this area, hit 7 and kind of stabilize, and then the stock bounces. Okay, so I'm not saying you're going to get the exact day or anything, but believe me, waiting for that turn to actually happen. I'm going to put this on a quarterly to make it even more obvious. So each one of these bars is now a quarter. They are 4 quarters, but it's every quarter, and we just keep rolling. It's like a rolling quarter there. And I'm going to have to zoom in a little bit for folks to see what's actually going on here. And I hope I can do this a bit tricky, but I think I'm capable of doing this. There we go. Okay. That's not too bad. Okay, if you look right in here, it is stunningly hard to believe, but the very bottom of the return on invested capital is the bottom of the stock. And then, just a quarter later, the return is higher, and so is the stock. I see no reason to try and outguess yourself and try and get ahead of it. It just rarely works. Might as well wait. And if from a risk management perspective, I'd say you definitely should wait even more, because I think you're managing the risk a lot by just confirming that it's actually turning around. Instead of speculating that it's turning around, you've confirmed it. Okay, so I say we have a confirmed turnaround. I think it's still a good brand. I think it's still got a good reputation in the marketplace. I put in a return on capital that's improving and going forward, and the valuation is pretty reasonable. So look, you got what appears to be the bottom. You got the brand intact. It didn't suffer anything in that regard, and a decent valuation. You can't ask for much more. I kind of like our little graphic here, by the way. We got Steph Curry in the bottom here and Jordan Spieth on top. And there you go. Under Armour, in this tech rally, we found one that's non-tech and was up 4.8%, beating many of these tech companies in the rally.